This is TechCrunch. After 18 years of focusing on Europe, early-stage investor Seedcamp said on Monday that it had raised $320 million for its latest fund, which will see it expanding its presence into the U.S. Fund 7 is the investment firm's largest so far, double the $180 million it had raised for Fund 6 in 2023. However, Seedcamp is splitting that amount to focus more on growth-stage investments. $220 million is slated for Seedcamp 7, its vehicle for early-stage investments, while the remaining $100 million is being set aside for growth stage, follow-on investments via a new fund called Select. Seedcamp already has offices in New York City and Miami, but the firm is now setting out to grow the team stateside in an effort to connect more of its European portfolio to U.S. customers and investors, especially with San Francisco and Silicon Valley regaining their position as a center of gravity in recent years. Reshma Sahoni, Seedcamp's co-founder and managing partner, told TechCrunch, "We need to plug founders to nodes that are connective." Sahoni said the firm will continue its thesis of being one of the first investors in upcoming startups, be they pre-product, pre-revenue, or even pre-traction. The firm is tapping its extensive network of portfolio startups and LPs for deal flow. Now, that thesis has served Seedcamp pretty well. The firm was one of the first investors in several successful tech companies, including FluidStack, Pleo, Revolut, Synthesia, UiPath, and Wise. It has 12 unicorns in its portfolio of more than 550 companies and $1 billion in assets under management. Seedcamp 7 is looking to invest roughly $1 million as a first check in about 100 to 120 startups and follow on in later rounds. The growth fund will invest about $3 to $5 million per check, following on in Series B rounds and later. Sahoni said, limited partners in Fund 7 include British Business Bank, HarbourVest, Schroders, and Safina, as well as 80 of its portfolio company founders who have pitched in as angel investors. Seedcamp will continue to invest across sectors, though Sahoni said the firm will continue to steer clear of capital-intensive businesses like mobility or marketplaces. She added, "We tend to avoid capital-intensive startups because funding working capital isn't a great model on day one. We're definitely a commercial-driven investor." That's all for now. For more stories like this one, go to TechCrunch.com.